Did you know that Goldman Sachs, a very well-known trading bank, thinks Tesla is a great buy right now? A lot of investors, including Goldman Sachs, are still optimistic about Tesla stock and are sure that their money will be well spent. To find out more about this, stay tuned and watch more. It's not a surprise that Tesla is now one of the most popular stocks on the market. Some people say that the electric vehicle makers' stocks are way too expensive, but a lot of other people think that Tesla stock is worth every bit, and some even say that the stocks are too cheap. Today, we're going to talk about why you should buy Tesla stock now. Goldman Sachs says that Tesla stock is a great buy. As of now, Goldman Sachs says that Wall Street is becoming more optimistic about Tesla stock. However, the price hasn't gone up because investors were afraid of higher interest rates earlier in the year. Mark Delaney, an analyst at Goldman Sachs, raised his price target for Tesla stock from $1,125 to $1,200 while keeping his buy rating the same. He also said that Tesla was one of the best ideas for 2022. Goldman Sachs picked Tesla and a few other EV-related stocks in March to profit from the trend of green inflation and rising oil prices. Analysts at the bank think that most of the stocks could go up by at least 50%. In fact, Goldman Sachs says that new electric vehicles will continue to help buyers make money in 2022. They told people in 2016 that it was time to buy Tesla stock. After telling people for 3 years to just wait for it, Goldman Sachs finally put money into Tesla Motors in 2016. In that same year, the big investment bank changed its recommendation on the stock from hold to buy, but kept its $250 price goal. This caused Tesla shares to go up in early trading. At that point, Goldman had not given Tesla a buy rating since February 2013, when they set a price goal of $45. Goldman Sachs says again today that Tesla stock is a great buy. As a top global bank, Goldman Sachs Group Incorporated offers a wide range of financial services to a large and varied client base that includes businesses, governments, financial institutions, and individuals. These services include investment banking, securities, investment management, and consumer banking. The company was started in 1869 and has offices in all the major financial cities around the world. Its main office is in New York. Goldman Sachs' goal is to promote long-term economic growth and financial opportunities around the world. They use their people and resources to help their clients succeed, make more people wealthy, and speed up economic progress for everyone. They do this by drawing on more than 150 years of experience working with the world's biggest businesses, entrepreneurs, and organizations. Tesla shares have gone up 12% in the last 3 months, which is a lot more than the S&P 500's drop of almost 5% during that time. Wall Street thinks that the rise in Tesla shares is due to excitement about new laws that will make it easier for people to buy electric vehicles after 2023. Bears are also much less worried about Tesla now that it has had a good run in the first 2 quarters of the year. Even though Tesla stock has gone up, Goldman Sachs expert Mark Delaney thinks the company has more potential. I talked to Martin Vicha, Tesla's head of investor relations, and this is what Delaney had to say. Delaney set a price goal of $333.33 and reiterated his buy rating. He also predicted that the stock price would go up by 22%. Delaney pointed out 3 main things to remember about this. The first is that Tesla's prices are going to go down. The cost of goods sold for each Tesla car dropped from over $70,000 in 2017 to about $36,000 in 2021. This number went up in the second quarter because of factory shutdowns, the cost of starting up new factories, and rising input costs. However, the cost of goods sold per car may go down over time because Tesla's Berlin and Austin factories are ramping up and fewer cars are coming from Fremont, which is a converted ICE factory with higher costs than Tesla's purpose-built EV factories. Better battery life, car platform, and scale. Second, Tesla is a big winner thanks to the act to lower inflation. It's too early to tell what effect the Inflation Reduction Act will have on Tesla. A lot will rest on how the government interprets the law. We should note, though, that the IRA does want to support an EV supply chain based in North America, and Tesla does more local production than most companies. According to news sources, the Model 3 and Y are the most American-made cars. That being said, we think it will be good for Tesla to be able to get at least some credits on some cars over time. We also think that Tesla could possibly gain from tax breaks for solar, batteries, charging, and commercial cars. Third, the limited number of EVs on the market helps costs and profits go up. Tesla thinks that people will move more and more toward electric vehicles, EVs, similar to how people switched from CRT TVs to LCD TVs and from feature phones to smartphones. But the EV industry might have trouble getting enough supplies in the short to medium term because it takes time for new battery parts to be stocked and put together. Do you really think it's a good idea to buy Tesla stock right now? Please tell us in the area below. The question now is whether or not this is a good time to buy Tesla stock. It's possible that Tesla stock is priced too high, but that price may be more fair than some buyers think. In fact, the price seems pretty fair when you look at the company's strong finances, high sales, and rising profits. Yes, Tesla shares do seem expensive when compared to other stocks based on price to earnings and price to sales, but there is a reason why the stock trades at such a high premium. There's no doubt that Tesla has good fundamentals. In fact, it will be hard to say enough good things about Tesla's basics. One thing is that the company has $18.3 billion in cash and cash equivalents on hand. The free cash flow from the last 12 months is also very amazing, coming in close to $7 billion. It was only $2.7 billion in 2020 and about $5 billion in 2021. Also, sales for the company are through the roof. Sales for the last 12 months are $67 billion, up from $54 billion in 2021 and close to $32 billion in 2020. And the management thinks that the strong growth will continue. In fact, management has said over and over that production and unit sales will rise at a rate of about 50% per year for the foreseeable future. And since delivery dates for some new Tesla models have been pushed back to as late as April of next year on the company's website, demand is still strong. This is a clear sign that Tesla management isn't lying about its sales growth goals. Also, it's important to note that even though Tesla makes a lot of money every year, the car company is probably still just getting started. Tesla's leaders have always seen the market for gas-powered cars as the one they could reach, not the niche market for electric and hybrid cars. And since almost every big automaker is now putting a lot of money into electric cars, this view of Tesla's target market seems more accurate than ever. In 2022, J.D. Power predicts that 80.8 million vehicles will be sold around the world. This is clearly a year when problems in the global supply chain have made it harder to sell new cars, which shows how much Tesla can evolve. In 2021, the company delivered less than 1 million units. Still, Elon Musk, CEO of Tesla, said at the company's most recent annual meeting of shareholders that when other car companies advertise their electric cars more, it actually makes more people want Tesla's cars. Electric cars are still so new that people may not know about them, which could be the main thing stopping sales. Tesla's rapidly expanding energy business could also be useful. Musk said that he believes the company's energy business could one day be as big as its car business. This is Goldman's main point about investing in Tesla. We think that Tesla is a good company to benefit from the long-term shift to electric vehicles, EVs, because it is a leader in EVs, its hardware and software are tightly integrated, it has a large network of charging stations, and it focuses on clean transportation in general through its solar and storage businesses. In the short term, we think that Tesla's margins will grow as it ramps up the important Model Y product and builds new factories in Berlin, Germany, and Austin, Texas. In the long term, we think that Tesla's margins will grow as it grows the amount of software revenue it makes. Even though some people might not agree, Tesla is clearly a major player in the electric car market. Elon Musk, the CEO of Tesla, is sure that the company will stay at the top of its game in the coming years. They will be making the much-anticipated Tesla Cybertruck and the robotic robot Optimus. Don't forget to like and subscribe, and check out our other movies for more video about Tesla stock.